In this episode, we'll go through Adelaide property market update, June 2023. We'll talk about the demand-supply dynamic in Adelaide. Also, the repealment of stamp duty that was just announced. Number two, I'll share with you on a map the best suburbs that you should maybe consider right now versus the worst suburbs that others are considering, but perhaps you should be very shy about. And number three, I'll give you my synopsis overall of whether to buy in Adelaide or not. I hope you get a lot of value from this one. My name's PK and I help people build passive income through Property Investment Accelerator using data without needing $15,000 for a buyer's agent every single time. In this channel, we talk about property, the economy, and financial happiness. Hit the subscribe button, hit the like. Before we begin, big news. Stamp duty has just been waived for first home buyers in South Australia, of course, Adelaide, okay? So this is just out a few days ago. Stamp duty will be waived for first home buyers in South Australia as the government hands down a new state budget focusing on housing and health. The key thing that I want you guys to take away is about 3,800 first home buyers each year will benefit from waived stamp duty on newly built properties valued up to $650,000 or vacant property up to $400,000, okay? And the eligibility for the $15,000 first homeowners grant will also be extended under the move, which will include properties valued up to $650,000 from $550,000. So this means that the stamp duty, if you buy a house under $650,000 as to live in, your stamp duty is gone. The state government is saying this will help people by $50,000 on average. That is their word. So what will that do as we go into this video? That will mean that there's fuel under the fire of the South Australian property market. I don't think it will boom, but just what this means is whatever that stamp duty amount is, that is how much these affordable properties under $650,000 will rise in the short term, because water always finds its own level. And all of a sudden, those people that couldn't afford a property because they are $50,000 shy, now they can. So hence demand goes up, they get into the market, prices go up. That's exactly what happened in South Australia when commercial property stamp duty was removed. All of a sudden, within a year, commercial property prices went up by the same quantum of the implied stamp duty. So there's a bit of a kicker as we start this video. I promise the juicy stuff is coming, the maps, but to start with, I just want to share you this table from Matusik. It gives you a really good overview, helicopter view, bird's eye view of what's going on around the grounds and how Adelaide fits into other capital cities and where to invest in 2023 right now. So you can see Adelaide here in this row, the sales market versus the rental market. So the sales market, sales in terms of how many sales are going on, is pretty flat. It's not up, okay? That doesn't mean that there's more demand coming on in Adelaide, nor is it going down. That doesn't mean that demand is drifting away from Adelaide. For sale, so this is the listings, how much supply there is in the market. That's not going up, okay? So it's not like, oh, all of a sudden there's so many defaults and all this sort of stuff because of interest rate rises. No, it's flat, okay? And at the same time, it's not going down either. So supply isn't getting worse and worse to create a price boom in Adelaide. What are asking prices doing? So this isn't sold prices, this is asking prices, okay? And that's going up. So generally speaking, sellers, vendors, real estate agents still think that this boom that Adelaide has just had in the last 2 or 3 years is continuing, but what they may actually end up realizing for the property isn't quite as high as what they expected. There's common signs for like the tail end of a property boom in a particular city. For rents, Adelaide is going flat, okay, for rent. How number of properties is flat, so not more, increasing more supply, not less, increasing demand versus supply, but the asking is going up, okay? Same number on a weekly, monthly, yearly basis of rental properties, but the price of those rentals is going up, as is going up basically across the board. So you can see Adelaide's position in context of the broader nation is basically in a, I would disagree with this saying downturn. I would say it's pretty flat, it's kind of stable. Obviously, we'll go into right now in a second, like suburb by suburb, where it's good, where it's not good. But overall, I would say it's kind of flat. I don't agree with all of these Matusik insights, but they are very interesting and big credit for him for producing them. As you can see, Perth is in an upswing, the only capital city. It's no wonder, you know, like everyone knows that we're buying, mostly my clients at least, in Queensland and Perth. There's no wonder because we just follow the data, right? And generally speaking, these other places are not the best timing to buy right. And just bear with me for one more chart before we get into the juicy stuff. The other thing I want to share with you really quick is just how much Adelaide has fallen from its peak. Okay, everyone's like, oh, property prices boomed in 21, 22 and now they've fallen off a cliff, right? Well, not really. Okay, so check this out. Adelaide, it's still at its peak. Okay, so the growth is still positive, both monthly and yearly. Just understand markets within markets. The whole Australian nation hasn't had a massive price correction. Sydney has, Melbourne has, other places have, but not really Perth or Adelaide. So I just had a lady DM me on Instagram saying, Pika, I'm going to sign up for your course, but I really want to buy in Adelaide. And I was like, look, you can sign up for my course, but honestly, hand on my heart, I cannot recommend any suburbs in Adelaide at the moment. She's like, what, they're still going up? No, they are going up. And yes, they haven't fallen off a cliff, but that cliff, I want to show you cliff. I shouldn't say cliff. It's like a mild correction is coming for Adelaide. That's pretty much a spoiler for this video, but let's go into suburb by suburb right now. So this is the CoreLogic mapping the market tool. It's a free tool. You can use it yourself as well. This is up-to-date data, June 2023. And so I'm going to take you through 5 metrics and we're going to go suburbs, okay, deep diving to give you a lay of the land of where to maybe still invest versus where to be very cautious of. Okay, the first metric that we'll go through right here is current median value, just to give you context. So this is Adelaide, obviously, as you can see, and the darker the shade of purple, the more expensive it is, all the way up to above 2.5 million. And the lighter, the cheaper it is, all the way down to under 300k. So let's just zoom in a little bit. Naturally, as you'd expect, closer to the CBD here, you've got a lot of more expensive, above 1 or 2 million type suburbs around the ocean side, and then here in the hills side, you actually find Adelaide's quite interesting. It's not the waterside suburbs that are the more expensive ones. It's more these sort of south eastern suburbs close to the really good schools, really good owner-occupier pockets that are the most expensive. And then you come down and you're like, hey, Pika, I don't have $2 million to spend. I only have 500k, 400k, 600k. Well, then you're looking further down into places like this, okay? So Hallett Cove, you're looking at places like Raynella East, you're looking at Happy Valley, you're looking at Trott Park, etc., etc. These are all sort of under 800, 700, 500k. Morphett Vale come down to Christie's Beach, where I think there may be a little bit value, but let me qualify that. And then you've got this really nice area up the top of Adelaide. Now, a lot of people have a stigma against places like Parafield Gardens, like Peruka, like Modbury Heights. But I can tell you, and congratulations to all of those clients that are watching this, we were buying from in Adelaide from between sort of 2019 and we basically stopped buying there early 2022, if not sort of late 2021. I can't tell you how many properties we bought. We started more around this area, around Valley View and Newton, and these sort of more inner pockets. And we went all the way up, not to Elizabeth. We kind of maxed out at the sort of Salisbury, Harrowfield Heights, Paraloe, to some extent, Burton area. We bought hundreds and hundreds and hundreds of properties there, as we did down here. Okay, initially we were buying a lot around places like Happy Valley. We were buying a lot around Trott Park, Hallett Cove, and then those became more and more expensive and it didn't meet our threshold. So we went down into places like Woodcroft, like Ranella, Morphett Vale, even Christie's Beach, where the yield wasn't that good, but Morphett Vale was a huge hunting ground for us. And all these places, like, they've basically doubled. Okay, I know overall Adelaide hasn't doubled, but we're buying places in Morphett Vale for like, high 200s, 300s, and try to find that same house for under 500k, under 550 right now, and it's almost impossible in the last 2 or 3 years. So, that has been the kind of sweet spot for my own investing, affordable properties in good locations. Every suburb, even a kind of helter-skelter suburb, has good pockets and bad pockets. And if you time it right, get the data right, it does really well with yields above 6%. But you can see, generally speaking, there's still a lot of value in Perth. There's still a lot of affordability in Perth. Those two terms should not be used in the same vein. It can be affordable, but it may not be a good value play. And I'll get to that in a second. 3-month value change. So what you're starting to see is, despite the table that I just shared before where Adelaide isn't dropping, you're seeing the premium end of the market start to show signs of weakness. Okay, all of this red means that there's price drops in the last 3 months. And you can see that this is predominantly in those more expensive areas that I just shared. So it's not that the more expensive blue chip properties closer to the CBD where everyone makes 300K a year, that those areas don't fall. Every property falls, every property goes up. Okay, don't have to spend $1 million on a negatively geared property to make money and make passive income in property. Okay, you don't need to do that. So basically, it's clear that the affordable locations have held up. Of course, that doesn't mean you just go off and willy-nilly buy an Elizabeth or any of those areas just because they're still booming. Okay, you might find that a lot of newbie property investors, newbie buyers agents, they're like getting their clients into places like Elizabeth, and the clients are high-fiving each other because like, oh yeah, I just made like 100K in the last year. But long-term factors need to be considered as well, like gentrification. Is it there? Is it not there? Long-term supply. Like there's a lot of building approval up here, a lot of new houses coming on the northern part of Adelaide. You have to be very careful of that. And newbie and unseasoned, or I would even say like just uneducated property investors are going to feel some pain in Adelaide perhaps in 4, 5, 6 years time when all of this supply starts to come on. Okay, let's go to the 12-month change. Okay, this really shows how data-led property investors can avoid the biggest downturns in any capital city. So those that were data-orientated, they weren't buying places above $700,000, $800,000, and it's really these areas that were above $700,000, $800,000 that have corrected a lot in Adelaide. Okay, they've corrected a lot. So all of this blue chip asset area has gone down quite a lot. Now, of course, there's markets within markets, and if you got this like areas like here, Taparoo, I remember one of my clients buying in Taparoo, I think it was just like early last year, and she had it revalued up by like 150K by the end of the year. Now, you can select pockets of suburbs that still hold their own. That it all comes down to intra-suburb factors. Okay, so I'm not just saying all of this is bad, but you have to choose very wisely. But once again, the lion's share of areas that we were buying in, and hopefully other property investors that weren't even my clients are buying in, they're holding their own, and that's great to see. And that's really the story of Adelaide. It's kind of like a decoupled market. The expensive half is falling and the affordable half continues to do well. So a lot of you might be looking at areas right now that are in your budget, and you're looking at like places like Anglevale, you might be looking at places like Deveron Park, you might be looking at places like Elizabeth North, Elizabeth Downs, Elizabeth Park. And I would really encourage you that yes, there has been massive price increase. Like check this out, Deveron Park. I can't say that any client has bought in Deveron Park yet. Prices have gone up more than 20% just in the last 12 months. So why haven't we done that? It's because of the supply story. We do not see that being sustainable, and we see that this perhaps in 1 or 2 years time becoming very red, a very dark shade of red like that. So if you're a new property investor and you're like, what's wrong with places like this? You can buy something under 350. It's positive cash flow. What could possibly go wrong? You just need to step back and understand building approvals. You have to call the council and understand, okay, around the Salisbury area, how many new houses are going in? Now, Adelaide is putting in a lot of houses, more than 20,000 over the next 10 years. So you need to be careful and pick your spots very carefully. Having said that, there are some locations just north of Perth that have a lot of strength, and I'll leave you to really deep dive, and I'm not saying to go and invest there, but places like Nuriotpa and others, just come back in 12 months and see how much they've improved. That's kind of an unofficial tip right there. Now let's switch to the rental market. Okay, so houses, once again, the current median rent, as you can imagine, is the most for these areas where there's the darkest shade of purple, and you might be confused saying, well, don't we want huge rents? That's why we should buy in these blue chip areas with huge asking prices, $1 million, $2 million. But actually what you find is that rents or yields don't keep up as you go beyond 700K. So you really want areas that maybe don't have the hugest rent, but have the biggest pool of available renters, sub 700, sub 800, sub 600,000 type rental properties. And that way you always have have demand for renters. It'll never have huge vacancy. And so once again, that leads us to this kind of southern corridor around Park Home, like Oaklands Park, like Mitchell Park, all the way down, like I said before, to Morfett Vale, Ranella, Hackham, Seaford, Christie's Beach. On the north side, you've got this. I love this pocket. I think long term, there's the most value. If you don't care about short term growth and you only want 20-year, 10-year growth, Adelaide is incredibly stable. It never booms hugely, except for this last time, and it never really goes bust. Okay, what it does is consistently perform. So if you have a bit of a heart issue, then maybe Adelaide is a good place for you to invest because it's remarkably stable. And the pocket which is the most stable is around here: Hope Valley, Valley View, Holden Hill. These are really, really nice areas. I wouldn't recommend my clients, or my clients wouldn't use the data to find these areas themselves right now in this part of the cycle. But if you didn't care about short-term growth, I'm very bullish on this kind of inner northeastern pocket of Adelaide. And then the 12-month rental change, okay, the 12-month rental change. And so you're seeing that, of course, everywhere rents have gone up. They've gone up. There's not really any particular area where they've gone up the most. Maybe this kind of inner area, inner west, around here, around Kidman Park and Underdale and places like that. But generally speaking, all of Adelaide has done really well. Of course, the rental crisis isn't as chronic in Adelaide compared to a place like regional Queensland or a place like Perth, but nonetheless, rents are going up almost everywhere. Guys, so last video I do it was exact same, mapping the market, the best suburbs, the worst suburbs from a rent house growth perspective in Perth. This obviously is Adelaide. Let me know in the comments what the next video should it be. Should it be Sydney? Should it be Melbourne? Or should it be Brisbane or some other location? Comment below Sydney, Melbourne, other location of Brisbane, and then I'll just use that as inspiration, as fuel to produce more of these videos that hopefully are bringing you value. So overall, I think Adelaide is not a buy if you're looking for short-term growth. If you're looking for long-term growth only, I think there's tremendous possibilities and opportunity in Perth. I think regional South Australia, a little bit north of Adelaide, has perhaps some better opportunities than Adelaide proper, but prices are still rising, prices are still going up, rents are still going up, and the market is very, very healthy. Let me know what you think, but thank you so much for watching this video. Always remember, ideation without execution is delusion. So take these ideas that I've given you and act upon them. Do something. It's that will bring you the fruit. And to do that and really invest in the 6 inches between your 2 ears, I'll leave links below to my podcast, Australian Property Mastery, on Spotify, Google, and iTunes, and also my Facebook group with more than 30,000 amazing community members who do put things into action and help each other. Australian Property Mastery with PK. Links below. Guys, thank you so much. Hit subscribe. See you next time. Bye.